The following radio program is for informational purposes only and is neither specific nor tailored financial advice to any individual. It is not intended as an offer or solicitation for the purchase or sale of any financial instrument. Always do your own due diligence and consult a financial advisor before making any investments. Investing involves risk, which can result in the loss of any or all principal. Peter Weitz is a registered investment advisor with Fusion Analytics Investment Partners, LLC, an SEC-registered investment advisor, as well as a registered rep with Fusion Analytics Securities, LLC, a FINRA-registered broker-dealer and SIPC member. All views expressed in this program are those of the host or guests and do not reflect the opinions of Fusion Analytics Investment Partners nor its affiliates. Your investments. How secure are you that they are secure? Do you want to know more about investing, retirement, and moving to the next level in business? Welcome to In Black and Whites, featuring host Peter Weitz. Our program will answer all of the questions about your future and so much more. It's all about smart business and smarter investing. Now, here is your host, Peter Weitz.
Hi, thanks. Welcome back to the program. I'm your host, Peter Weitz. I alluded last week to a comment regarding Bitcoin. And if you listen to the intro to the show and you listen to the promos that run during the show, you'll find out that, we're all about investing, smart investing. We're all about safe investing and protecting you in your future. And again, going back to what I alluded to last week, I made a reference to Bitcoin. And I thought that I would spend today's program talking about my opinions and thoughts on Bitcoin and maybe throw in some other business things that really sort of piss me off or kind of get me going, if I can say that. But anyway, let me start out with Bitcoin. And there's been all this talk about the word and so forth. Let me define really, what it is. Okay, it really is. It's just a network, and it's a network that enables a new form of payment system using completely what they're calling digital money. It is the first what we know to as decentralized peer-to-peer payment network powered by its users with no central authority and no middleman. We'll get to that in a little bit. But from a user perspective, Bitcoin is pretty much like cash for the internet. It can also be seen as just sort of a virtual money. So it was created using a concept called cryptocurrency in 1998. And the idea was to control transactions using a new form of money, if you will, rather than a central monetary authority. And the first Bitcoin spec and proof of the concept was published actually in as recent as 2009. In a mailing list by a gentleman by the name of Satoshi Nakamoto. Well, he left this project in late 2010 without revealing much about himself, but the community has since grown with many software type developers working on Bitcoin. So the Bitcoin network is controlled, by really no one. Nobody owns it, much like no one owns the technology behind email. But it's controlled by the users around the world. So people that actually are owners, buyers, and sellers of Bitcoins are actually the control entity, which raises my first red flag. Without a central monetary authority, it just makes no sense whatsoever. So developers are always improving on the software, right? But they can't force a change in the Bitcoin protocol, because all users are free to choose whatever version or whatever software they want. So let's go back to, again, it's a currency, a cryptocurrency, a software, if you will, that's designed by multiple users all around the world. And it creates what the Bitcoin users consider to be a uniform means of transferring commerce and cash back and forth. But yet there's no one central point. So using the example of, let's take Microsoft Office. If Microsoft wants to make an upgrade to their package, they make the upgrade and it's implemented throughout all of Microsoft products around the world. It's a universal update. Here, there is no really version update, upgrade. It's all what anybody kind of just decides to control on the internet. It just is just a virtual software that anybody can control. And so it's It can only, but it can only really work correctly, as I understand it, if all of the users are in complete consensus amongst themselves. Therefore, they all have to have a strong incentive to kind of be on the same page, as it's the only way it's really going to work. So that brings up this question. How exactly does it work? Well, it works like this. From a user perspective, it's nothing more than a mobile app or a computer program that provides a Bitcoin, what we call wallet, that allows a user to send and receive Bitcoins back and forth. Okay. Behind the scenes, though, it's a network that is shared using a public ledger called a blockchain, and this ledger contains every transaction ever processed, allowing a user's computer to verify the validity of each transaction. The authenticity of each transaction is protected by digital signatures corresponding to the sending addresses, allowing all users to have full control over sending Bitcoins from their own Bitcoin addresses. So in addition, anyone can process transactions using the computing power of specialized hardware and earn a reward in Bitcoins for this service. This is often, you've heard the term mining. And so that's kind of how it works. But is it really used by people? Well, the answer is yes. I mean, it's a growing number of businesses and individuals that are using it. It actually includes, restaurants, apartments, law firms, online services such as WordPress. But while it remains relatively new, it's growing fast. At the end of August of last year, the value of Bitcoins in circulation exceeded 1.5 billion. And we currently think that there's a marketplace in Bitcoins into the trillions of dollars. So let's start with that. You got a network of virtual money, of really funny money that's worth trillions of dollars. And the only way it's ever valued is based upon not any kind of monetary or economic policy, but it's just based upon what the supply and demand of the Bitcoins are in the world. And if there is a greater demand for Bitcoins, then their value is going to go up. And, if there isn't, and vice versa. Well, if a marketplace grows from 1.5 billion at the end of 13 to essentially almost a trillion currently, you can imagine there's tremendous demand in the Bitcoins, and their values have gone up precipitously as a result. How precipitously? I looked up today just a couple of evaluations just to get an idea of what it's worth. Okay. One Bitcoin today in US dollars, is worth $379. All right. It's worth one Bitcoin. So if I was to buy something for $379, it would cost me one Bitcoin. I went to a couple other currencies. The Australian dollar, that same Bitcoin, is worth 434 Australian dollars, 298 euros, and 233 British pounds sterling. So similarly, you can see that the Bitcoin has a fluctuation in currencies based upon similar valuations of currencies as are regulated today, but yet I'm still having a tough time getting my arms around a virtual currency of a virtual coin that's worth $380 in the US. Now, how hard is it actually to use Bitcoins to make payments? Well, the payments are easier to make than with a debit or credit card. So what happens is you buy a Bitcoin and it's backed by your bank account, which has, we hope, money in it. And so you can make purchases using this Bitcoin, which is backed by your credit card or whatever you have, bank account you have on file. So payments are easier to make than debit or credit, and they can be received without a merchant account. So there's no reason to have the Visa, MasterCard, American Express account to transact Bitcoins. And payments are made from a wallet application either on your computer or your smartphone by entering an recipient address, the payment amount, and then pressing send. So it's pretty simple to move the money around, and it doesn't require any of the middlemen that a debit or credit card would actually require you to use. So the question begs is, are there any advantages of using this virtual currency that still scares the the hell out of me because I just can't believe that a virtual currency can actually be used to transact commerce throughout the world. And I'm going to harp on that for a long time. But the advantages of Bitcoin, as I just mentioned, there's that payment freedom, which it's possible to send and receive any amount of money instantly anywhere in the world at any time. No bank holidays, no borders, no proposed dollar limits. It allows the users to be in full control of their money. So it takes the banks, it takes the holidays, it takes the monetary policy, it takes all of the regulatory end of it out of the picture, and you can just move money around. Again, without any monetary policy, without any regulation, without any sort of government intervention whatsoever. Also without any third parties. There are no banks. There are no credit card processing companies. There's no clearinghouse for the money. So it's an instantaneous transfer from one person to another. And while that's an advantage, I find that to be a disadvantage just because, again, going back to the philosophy of this show and of my practice as a financial advisor, I don't find that to be a safe and prudent way to invest and or to send money. However, it seems to be pretty popular. They have low fees. Okay, Bitcoin payments are currently processed with either no fees or extremely small fees. Users may include fees in their transactions to receive priority processing or faster confirmation or faster shipping. But merchant processors exist to it converts Bitcoins to a flat currency and deposit it directly into a merchant account. So, where your fees may come in is a little bit in that foreign currency exchange, a little bit in that current exchange rate that's going down, but you essentially pay nothing in between. The merchants like it because they're not paying the processing fees to Visa or MasterCard, and they're immediately getting paid. Bitcoin users will tell you that there is a tremendous amount of security and a tremendous amount of control because they're in full control of their transactions. It's impossible for merchants to force unwanted or unnoticed charges as can happen with other payment methods. Bitcoin payments can be made without any personal information tied to the transaction. They offer strong protection against identity theft, and they protect their money with backup and encryption. So I think that this is a interesting phenomena in that, they say that there's security, and I can understand that without having the middleman and so forth, there's a tremendous amount of security in that my payment goes from one means to another. But again, I still think without any sort of regulatory backbone, how do you actually, if there's a dispute in any form or fashion, who actually adjudicates and who actually awards one side or the other in any kind of a dispute? The last advantage the Bitcoin users the large Bitcoin users will tell you is that there's transparency. All the information concerning the Bitcoin money supply itself is readily available on the blockchain for anybody to verify and use in real time. There's no individual organization that can control or manipulate the Bitcoin protocol because it is cryptographically secure. It allows the core of Bitcoin to be trusted for being completely neutral, transparent, and predictable. So you can go onto the Bitcoin sites and you can see exactly what the money supply of Bitcoins is at any given time. And that money supply is what's going to dictate what the pricing of the currency, foreign currency exchange related to that Bitcoin will be. Quick disadvantages, right? Obviously the degree of acceptance. And these are the things that I'm going to harp on after the break. But there's degree of acceptance. There's volatility, which we're going to spend a lot of time on. There's ongoing development issues. I mean, I think volatility is really going to be the thing that I'm most concerned about. And I think I'm going to spend a lot of time talking about that. And I'm going to do it right at the break. You're listening to the In Black and White's radio program on Voice America Business. We'll be right back.
When it comes to business, you'll find the experts here. Voice America Business Network.
ERISA 408B2, fiduciary standards, safe harbor, fidelity bonds, record keepers, discrimination testing. I am so confused.
Does your 401k plan have more questions than answers? Peter Weitz and his team of 401k experts have a solution. Their on-site service model distinguishes them from other service providers, and they are specialists in 401k costs, regulations, and compliance. If your 401k plan has more questions than answers, then contact Peter at 877-945-2888 or email him at peter@inblackandwhites.com.
Climbing Mount Everest is an amazing feat, and many have died trying to do so. However, more people have died descending Mount Everest than in reaching the summit. Part of the problem may be that people are so focused on reaching their objective that they fail to plan appropriately for what they will do or should be prepared for afterward. Similarly, people are so focused on saving for retirement and reaching retirement that they fail to plan appropriately for what they will encounter once they have actually retired. With 1 out of every 4 65-year-olds today living past the age of 90, you may be retired longer than you are actually working. Have you devised a plan, process, and discipline to ensure that you will not run out of money? If you are not sure what to do, then simply contact Peter Weitz and his retirement team at Fusion Analytics. We help manage human emotions using 3 proprietary investment techniques. Our job is to evaluate the forces that the typical investor can't see so that wealth is preserved and not lost. Find out more at inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. In Black and Whites, we win by not losing.
When it comes to business, you'll find the experts here. Voice America Business Network.
You are listening to In Black and Whites. To reach Peter Weitz or his guest today, please call 1-866-472-5790. That's 1-866-472-5790. You may also send an email to peter@inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. Now, back to this week's program.
Hi, thanks. Welcome back to the program. I'm your host, Peter Weitz. I'm ranting today about Bitcoins, and I just am blown away by the fact that people actually believe that this is a real thing. And, at the break, I was speaking with my engineer, and we were just talking about, what happens when the bottom falls out, just kind of like the housing market. How do you know that I mentioned earlier in the program that one Bitcoin today in US dollars is worth $379, right? So one Bitcoin was worth $370. Well, who came up with that value? And how do you know that that's a sustainable amount over time? Gas, for example, in the United States is regulated. And we know within a few cents on any given day where gas is going to be priced. I know that if I paid $3.50 a gallon 3 days ago, that I'm going to probably pay upwards or downwards a few pennies of that $3.50. And it's not going to have some precipitous drop like a rock over time. It's not going to be the internet bubble, or it's not going to be the housing market. Well, how do you know that about Bitcoin? And the answer is you really don't. And so when we spoke about the disadvantages of Bitcoin before the break, I mentioned volatility. And the volatility is based upon the total value of Bitcoins in circulation. And the number of businesses using Bitcoins is still relatively small compared to what the Bitcoin pundits believe could be. So because you've got small amount of trades, you ultimately could have a lot of volatility and have problems. But let me explain how, and I guess this gets back to what we were talking about at the break with my engineers. How do you come up with a value of a Bitcoin? And I think it's not a science at all. In fact, I want to call it a bunch of hocus pocus. But the question always comes up is, how do you determine the fair market value of currency that has appreciated faster than a share of the hottest technology stock on the market? And what do you do? What method for valuing a digital currencies do you use? Well, the Bitcoin people are going to tell you it's rather straightforward. And the assumptions that underlie competing valuations vary widely, but don't rely on Wall Street analysts to think for you. Instead, consider this framework I'm going to lay out for you and come up with your own fair market value and estimates for Bitcoin. So a lot of it is, your personal thing. Bitcoin, me make this statement. Bitcoin has value because people think it has value. There's no, gold like, in the old days, we used to have, the dollar was backed by gold and that determined its value. But Bitcoin has value because people think it has value. So your first question might be to ask whether Bitcoin, has any value whatsoever. Many Bitcoin skeptics like myself have knocked the virtual currency for its lack of intrinsic value. And I'm going to tell you, there's others that have joined my bandwagon, like Warren Buffett, who called Bitcoin a mirage, JP Morgan Chase's CEO, Jamie Dimon, and economists like former Federal Reserve Chairman Alan Greenspan and Nobel laureate Paul Krugman, who could both term Bitcoin to be evil. Well, despite, these well-known skeptics and a myriad of bad news in the press all through 2014, Bitcoin continues to trade for multiples more than it did a year ago. And so you ask the question, well, how is that possible? Well, Bitcoins have value because a small growing group of people believe that the underlying technology behind Bitcoin has value. They believe that the universal exchange of currency from point to point without the middlemans and without the processing has value. And that in and of itself is one reason what's driving the value of this virtual coin. In the future, technology could be used for a whole wide array of other financial services applications. If you think about it, from payments to contracts to distributed exchanges. And since Bitcoins are the scarce currency units which are required to power these applications, they're valuable. Well, currency, unlike fiat currencies where money supplies may be inflated by central banks, there are, a finite number of Bitcoins that will ever be released into circulation, making the currency a superior store of value versus other international reserves. Although it's not legal tender backed by a particular government, the currency's value is supported by the individuals and merchants who voluntarily accept it for their goods and services. So if we can agree that Bitcoins have a positive expected value because at least some people believe that this underlying technology has the potential to be revolutionary, then we can start to make our own estimates about its current fair value. Which leads me to this. So Bitcoin's value depends on transactional and reservation demand. So if you follow the logic of how the system works, right, it's important that, and let me make this notation. It's important to note the total market value of a currency, its monetary base, right, is driven by two things: transactional demand and reservation demand. So if you think of Bitcoin's average daily float as the analog of our economy's M1 money supply. So our M1 money supply means the currency needed to satisfy all the transactions that take place on any given day for goods and services. That's the amount of money that has to be available in the system. So if you think of Bitcoin's average daily float as similarly the M1 money supply here in the States, then you can think of Bitcoins as that's the amount of money they have to have in their reserves and they have to have available to meet that demand. Okay. Similarly, we can think of the Bitcoins, which are hoarded by speculative investors, as the currency needed to satisfy reservation demand for secure long-term savings. So if you combine Bitcoin's float and reserves, and if that comprises the total monetary base, that's similar to our economy's M2 money supply. So now I'm getting a little sort of technical here, but the M2 money supply are savings deposits, money market accounts, money that we have in the bank that we don't spend on any given day. So M1 plus M2 is M1 is money that's in motion every day to pay for anything that we buy and sell during the day. And M2 is what sits in the bank on reserve as our savings. Well, the hoarders and the Bitcoin users think of their money, they think of the Bitcoin the same exact way. There are people that are sitting on values of Bitcoins that will never spend it, thinking that eventually it's going to be worth more in value. And there's another amount of Bitcoins that are out in circulation paying for the transactions of paying for the transactions of goods and services that are accepted by Bitcoin throughout the world. And so the Bitcoin believers, the Bitcoin users, think that they've created their M1, M2 money supply, similarly to what we have here in the States. So the monetary base then relies on both consumers and investors who believe that the Bitcoin technology will power a certain volume of economic exchange today and in the future. Speculative investors, like the hoarders of Bitcoins, have shown their extraordinary willingness to buy Bitcoins, leading to a much larger monetary base than would otherwise be expected for a currency with Bitcoin's transactional volume. So let me explain what that means. There are people that are going out there and they're buying Bitcoins and they're doing nothing with those Bitcoins. They're sitting on them. But what it's doing is it's expanding the Bitcoin base throughout the world. It's giving it a greater amount of float, a greater amount of money out in the world, in the system. And so while there's very relatively few transactions from Bitcoin, there's a tremendous amount of Bitcoins in existence that are being bought by people who want to use it as a potential savings tool. That's causing the growth of Bitcoin and driving the price of each Bitcoin up. I'm not saying that I believe this, but this is actually what's going on in the real world. So going back to my valuation, right? As long as the transactional demand for Bitcoin continues to grow exponentially as it is in the next few years, and as long as people continue to hoard Bitcoins, that Bitcoin's float and its total monetary base is going to potentially reflect the monetary base of other global countries. I mean, there's no reason to believe, if you follow the theory of the Bitcoiners, that this couldn't turn into its own amount of money, similar to the amount of money in a monetary base in the United States or in the UK, but they believe it's going to get there. So what they're saying is, and what the Bitcoiners are saying is, there's no real difference between a Bitcoin held for commerce and a Bitcoin held for investment, and it should be clear that we only care about the Bitcoin's total monetary base when it comes to valuation. That theory I believe with. I do believe that that would be a way to calculate value. I'm still having a tough time getting my arms around this whole valuation piece in and of itself. However, that would be one way to do it. So reasonable estimates of Bitcoin's future potential monetary base. Well, let's see. Bitcoins are worth about $5.5 billion today. But according to investor and entrepreneur Barry Silbert, there will continue the transactional currency is going to continue to thrive. He thinks the base is going to grow to between 50 and 100 billion in the next 18 months, and that Wedbush Securities feels that over the next couple of years, you're going to look at a valuation of about $13 trillion in Bitcoins. $13 trillion in Bitcoins will be out in the market in the next couple of years. So let me make a quick example. Let's assume that in my optimistic case for Bitcoin, and I'm going to make an assumption, and it's a crazy assumption, right? The monetary base grows to $1 trillion within the next 10 years. That would represent a fraction of the U.S. dollar's total money supply, U.S. Total money supply, and about half the value of the global market for gold. But if you then divided this monetary base by the total number of Bitcoins expected in circulation by 2024, all right, they estimate that there's going to be 21 million Bitcoins in circulation. You could see a $50,000 Bitcoin with a $1 trillion monetary base. So if you're comfortable with that assumption, all you need to do is boil down your $50,000 future Bitcoin dollars into present dollars. And if you take those assumptions and you break them down, then that gives you today a valuation in US dollars of $455 per Bitcoin, even though we mentioned its current value in the market is $379. I'm going to explain this a little more in greater detail after the break because it's just a staggering, moronic theory. And I'm going to do that in just a moment. You're listening to the In Black and White's radio program on Voice America Business.
From the boardroom to you, Voice America Business Network.
Climbing Mount Everest is an amazing feat, and many have died trying to do so. However, more people have died descending Mount Everest than in reaching the summit. Part of the problem may be that people are so focused on reaching their objective that they fail to plan appropriately for what they will do or should be prepared for afterward. Similarly, people are so focused on saving for retirement and reaching retirement that they fail to plan appropriately for what they will encounter once they have actually retired. With 1 out of every 4 65-year-olds today living past the age of 90, you may be retired longer than you are actually working. Have you devised a plan, process, and discipline to ensure that you will not run out of money? If you are not sure what to do, then simply contact Peter Weitz and his retirement team at Fusion Analytics. We help manage human emotions using 3 proprietary investment techniques. Our job is to evaluate the forces that the typical investor can't see so that wealth is preserved and not lost. Find out more at inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. In Black and Whites, we win by not losing.
ERISA 408B2, fiduciary standards, safe harbor, fidelity bonds, record keepers, discrimination testing. I am so confused.
Does your 401k plan have more questions than answers? Peter Weitz and his team of 401k experts have a solution. Their on-site service model distinguishes them from other service providers, and they are specialists in 401k costs, regulations, and compliance. If your 401k plan has more questions than answers, then contact Peter at 877-945-2888 or email him at peter@inblackandwhites.com.
Voice America Business Network, the bottom line in business.
You are listening to In Black and Whites. To reach Peter Weitz or his guest today, please call 1-866-472-5790. That's 1-866-472-5790. You may also send an email to peter@inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. Now, back to this week's program.
Hey, thanks. Welcome back to the program. I've been spending the vast majority of the show talking about Bitcoins. And, we've kind of, and at the break, I keep going back and forth with my engineer because we just can't get over this whole phenomenon and how it's actually catching on. It reminds me of things like a pet rock. Where the price of a Cabbage Patch doll, where all of a sudden I bought a doll and it goes up to be worth a ton of money because everybody wants one. But yet it's a virtual clearinghouse of nothing. It's just air. It's just transactions over an internet with no meaningful means of protection. And I think I spent a little bit of time in the last segment talking about how you value a Bitcoin or how they're valuing a Bitcoin. And, while there's logic behind what they're saying, it doesn't really factor in, some of the other issues that I think are going to potentially come up. And let's talk about those. So the first question I want to ask myself are Bitcoins legal? Well, the answer, to the best of our knowledge, is that they have never been made illegal by legislation in most jurisdictions. However, some jurisdictions, such as Argentina and Russia, have severely restricted or banned what they're considered to be foreign currencies. Other jurisdictions, such as Thailand, may limit the licensing of certain entities, such as Bitcoin exchanges. And so, while at the moment there's nothing that precludes you from using Bitcoins, I think that some of the local jurisdictions are starting to really take a look at that. And in fact, the United States, I want to point out, the Financial Crimes Enforcement Network, FinCEN, which is part of the Treasury Department, issued non-binding guidance on how it characterizes certain activities involving virtual currencies. And so there are some rules and some guidance that are coming out around the world. However, at the moment, it's still perfectly non-illegal. It's perfectly okay to pay for things in Bitcoins. And I'm going to get into the reasons why I don't believe that should be allowed in just a moment. Bitcoin is considered money. And money's always been used. My question to myself is, what about if I use it for illegal activities? and it can still be used for illegal activities. Cash, credit cards, and current banking systems surpass Bitcoins in terms of their use for financing crime, but Bitcoin can bring significant innovation in payment systems and benefits that go beyond their drawbacks. And so it actually, I think, if you think about it, could actually be a really big deal for crime. Right now, if you look at money laundering in the United States, all you really need to do is follow the trail. You follow the paper trail, and you're able to determine where money came in and where it went. Well, there's really no way to do that with Bitcoin because it's going from one computer to another, and it could just keep going from computer to computer to computer, and it end up, since it's virtual, it really never ends up anywhere. Some more concerns with regards to illegality. It's designed to be a huge step in making money more secure, is what the Bitcoiners are saying, which could also act as a significant protection against many forms of financial crime. But Bitcoins are completely impossible to counterfeit. Users are in full control of their payments and cannot receive unapproved charges, such as credit card fraud or with credit card fraud. Bitcoin transactions are irreversible and immune to fraudulent chargebacks. Bitcoin allows money to be secured against theft and loss using strong and useful mechanisms such as backup and encryption. And these are what the Bitcoiners believe the reasons are that it's such a good form of currency. But let's go back to the concerns about the illegality of Bitcoins, right? Concerns have been raised that Bitcoin can be more attractive to criminals because it can be used to make private and irreversible payments. But Bitcoin people saying these features already exist with cash and wire transfers, and they're widely used and well established. The use of Bitcoins will undoubtedly be subjected to similar regulatory regulations that are already in place inside existing financial systems, and Bitcoin is not likely to prevent criminal investigations from being conducted. So the Bitcoiners are saying that the internet and the way we transact on the internet actually helps to reduce crime and not increase it. So leads us down to this path. Well, what do we think about Bitcoins? Can they be regulated? The Bitcoin protocol itself cannot be modified without the cooperation of all the users who choose what software they use. So attempting to assign special rights to a local authority in the rules of the global Bitcoin network is not it's not practical or possible. So any rich organization could choose to invest in mining hardware to control half of the computing power of the network and become able to block or reverse recent transactions. But there's no guarantee they can retain this power since it requires investment in as much as all the other miners in the world. Those are Bitcoin miners I'm talking about. So it's just because it's a network. It's every time something gets added to the network, and because it's a network of software and software-related users, then it's going to be extremely difficult to regulate, almost impossible. And somebody can just come in and invent something new tomorrow, and the regulation could completely have nothing to do with what they just invented, and Bitcoin continues to go on and on and on. So it is, however, possible, though, to regulate the use of Bitcoin in a similar way to any other instrument. So let's just say, just like the dollar, Bitcoin can be used for a wide variety of purposes, some of which can be considered legit or not as per the jurisdiction's laws. So in this regard, Bitcoin is no different than any other tool or resources and can be subjected to different regulations in each country. Bitcoin use could also be made difficult by restrictive regulations, in which case it's hard to determine what percentage of users would keep using the technology. A government that chooses to ban Bitcoin would prevent domestic businesses and markets from developing, shifting innovation to other countries. So the challenge for regulators, as always, is to develop efficient solutions while not impairing the growth of new emerging markets and businesses. But what about taxes? Bitcoin is not a flat currency with legal tender status in any jurisdiction, but often tax liability accrues regardless of the medium used. There's a wide variety of legislation in many just different jurisdictions which could cause income sales, payroll, capital gains, or some other form of tax liability to arise with Bitcoin. Now, while I do agree with that, I mean, the reality of it is if somebody pays for a good or service of mine with a Bitcoin and I'm in the retail business, I'm still required to report the sale and the sales tax associated with that to the state. Or if not, if it's commerce that doesn't require sales tax because it's between states, I'm still required to report that income and pay income taxes on the sales of my goods. And so I'm not quite sure that the tax implication is going to be an issue, but I'm real more worried about the economic impact, and I'm worried more about the regulatory impact. And globally, I'm worried about what happens if this whole Bitcoin phenomena implodes. All these people have spent all this money buying Bitcoins, and they're completely worthless. And that is definitely, without regulation, without any kind of government intervention, without any kind of controls, that's something that definitely, I think, has to be the biggest concern of everybody in mind. And so, let's talk a little bit more about consumer protection. It's freeing Bitcoin. What the Bitcoiners are saying is that it's freeing people to transact on their own terms. Each user can send and receive payments in a similar way as cash would, but they can also take part in more complex contracts. Multiple signatures allow a transaction to be accepted by a network only if a certain number of defined groups or persons agree to sign the transaction. So they can be very innovative, and they can be very strict in how payments are made based upon how it's set up inside the network. But they feel that allowing services, additional signatures, and so forth, or allowing a third party to approve or reject a transaction helps to avoid disagreement between parties, and even though they don't necessarily have control of their money. But there's always proof that a transaction did take place because it's on the network, and that could potentially be used against businesses with fraudulent practices. And they feel, the Bitcoiners then, that they are offering a very safe means of moving money that's completely transparent, that offers a paper trail of money, shows you the transaction, so that there really wouldn't be hardly any reason for fraud to exist. I disagree. I think the fraud, forget the transaction, I think the fraud exists because you're dealing with funny money. You're dealing with something that shouldn't even exist. And I also want to say before I move on, it's worth noting that while merchants usually depend on their public reputation to remain in business and pay their employees, they don't have access to the same level of information when dealing with new consumers. The way Bitcoin works is it allows both individuals and businesses to be protected against fraudulent chargebacks while giving the choice to the consumer to ask for more protection when they're not willing to trust a particular merchant. So the network of Bitcoin, if you follow what the Bitcoiners say, and I'm going to keep qualifying that, they're saying that they provide more levels of security against fraud than the credit card companies, than the debit cards, the banks, and so forth. And that's why they believe it's such a better economic, better technologically driven system to transact commerce. The economy, we're going to talk about in just a minute, and we're going to sum up really a little bit more about Bitcoin. I'm going to change gears at the very end of this. I'm going to do that in just a moment. You're listening to the In Black and White's radio program on Voice America Business. We'll be right back.
Voice America Business Network, the bottom line in business.
ERISA 408B2, fiduciary standards, safe harbor, fidelity bonds, record keepers, discrimination testing. I am so confused.
Does your 401k plan have more questions than answers? Peter Weitz and his team of 401k experts have a solution. Their on-site service model distinguishes them from other service providers, and they are specialists in 401k costs, regulations, and compliance. If your 401k plan has more questions than answers, then contact Peter at 877-945-2888 or email him at peter@inblackandwhites.com.
Climbing Mount Everest is an amazing feat, and many have died trying to do so. However, more people have died descending Mount Everest than in reaching the summit. Part of the problem may be that people are so focused on reaching their objective that they fail to plan appropriately for what they will do or should be prepared for afterward. Similarly, people are so focused on saving for retirement and reaching retirement that they fail to plan appropriately for what they will encounter once they have actually retired. With 1 out of every 4 65-year-olds today living past the age of 90, you may be retired longer than you are actually working. Have you devised a plan, process, and discipline to ensure that you will not run out of money? If you are not sure what to do, then simply contact Peter Weitz and his retirement team at Fusion Analytics. We help manage human emotions using 3 proprietary investment techniques. Our job is to evaluate the forces that the typical investor can't see so that wealth is preserved and not lost. Find out more at inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. In Black and Whites, we win by not losing.
The business community's first choice in Internet Talk Radio. Voice America Business Network.
You are listening to In Black and Whites. To reach Peter Weitz or his guest today, please call 1-866-472-5790. That's 1-866-472-5790. You may also send an email to peter at inblackandwhites.com. Weitz is spelled W-E-I-T-Z. Email Peter at inblackandwhites.com. Now, back to this week's program.
Hi, thanks. Welcome back to the program. I'm your host, Peter Weitz. I'm spending today talking about Bitcoin. And, you know, as I'm going through the data and I'm going through the information that I've been discussing on the program, I'm still torn. I'm still confused about the overall makeup of the Bitcoin and how it's going to sustain itself in the future. And I'm going to spend the last segment of the show talking about its impact on the economy. So let me begin by just saying I haven't really I've mentioned this word mining, and I want to talk about what that means. Bitcoins are generated, okay, by a competitive and decentralized process, which the Bitcoiners call mining. What it involves is having individuals are rewarded by the Bitcoin network for their services. Bitcoin miners are processing transactions and securing the network using specialized hardware and are collecting new bitcoins in exchange for this service. So the Bitcoin protocol is designed in such a way that new bitcoins are created at a fixed rate. This makes Bitcoin mining a very competitive business. There's only so many bitcoins that are out there. When more miners join the network, it becomes increasingly difficult to make a profit, and miners must seek efficiency to cut their operating costs. No central authority or developer has any power to control or manipulate the system to increase their profits. So every Bitcoin node in the world will reject anything that does not comply with the rules it expects the system to follow. Bitcoins are created at a decreasing and predictable rate. The number of new Bitcoins created each year is automatically halved over time until Bitcoin issuance halts completely with a total of 21 million Bitcoins in existence. At this point, Bitcoin miners will probably be supported exclusively by numerous small transaction fees. So we keep bringing up a question of value, and we keep bringing up a question of what happens. Well, according to Bitcoin, I don't know if I believe this, but according to the rules that, but I don't know who decided it. There's no governing authority that decided the rules. They were just made up by this man in 1998 and through 2010. And he said that we're only going to make 21 million Bitcoins. And once we get to that number, that's it. That's all the Bitcoins that are going to be in existence. And that's what's going to be able to determine their value, because there's only so many out there. And I don't know what that means for the long-term prospect of Bitcoins. I don't know if that's enough. I don't know if that's too little. To me, it seems like a very, very small number. And I just can't imagine that's going to be able to hold their value. In fact, if you look at history, there's been many histories littered with many currencies that fail, that are no longer used, such as the the German mark during the Weimar Republic, and more recently the Zimbabwean dollar have failed. Although previous currency failures were typically due to hyperinflation of a kind that Bitcoin is saying is impossible. There's always the potential for technical failures, competing currencies that are made up, political issues, and so on. So as a basic rule of thumb, my rule of thumb, I don't think any currency should be considered absolutely safe from failure or hard times. Bitcoin, for the moment, has proven reliable for several years since its inception, and there's a lot of potential, as we've discussed today, for its growth. However, I just can't. No one's in a position to predict the long-term viability of Bitcoin, and I certainly don't believe that it's a method of currency exchange throughout the world that's going to be able to maintain and sustain itself. So I guess that leads me to this other question of and as I read to you a moment ago. Bitcoin has a limitation, a finite number of Bitcoins, in that only 21 million Bitcoins will ever be created. However, they feel, the Bitcoiners, that this will never be a limitation because Bitcoins can be divided into 8 decimal places, which is 0.0000001 Bitcoin, and potentially even smaller units if that's ever required in the future. As the average transaction size decreases, transactions can be denominated in subunits of a Bitcoin, such as a millibitcoin. And so we talk about regulatory, in a government world and, the Fed and so forth. If you have a dollar, right? Well, I can't guard against inflation, but I can tell you that a dollar can be divided up into 100 pieces. That's it. From a penny to a nickel to a dime to a quarter, and any combination thereof, adding up to $1. What Bitcoin is saying is that, we're issuing 21 million Bitcoins, and that's it. But we have the right to carve them up into 8 decimal places, and if that's not enough, we can carve them up again. Well, anyone knows that when you continue to increase supply and increase supply and increase supply, all it does is kill demand. And what that does to the price is it drops it into nothing. If you were to come to me and tell me there are 21 million Bitcoins and that's it, and I'd be good with that because I could come up with a value. But now what they're saying, the Bitcoiners, are that, we're only going to make 21 million, but we have the right to curve it, to divide it up into decimal places. And if that's not enough, we can do it again. And once you do that, you've diluted any kind of value whatsoever. So not knowing how they're going to divide it up into decimal places, I think hurts early adopters of Bitcoins today because they're paying $380 US for something that could be worth 8 cents US in the future, knowing or not knowing how they carve it up. Excuse me. So to me, it's a chicken and an egg situation. For Bitcoin to be able to stabilize, a large-scale economy needs to develop, and more businesses and more users need to embrace it. And that's what's going to help its stability. However, volatility, and for them, I'm going to say volatility does not affect the main benefits of Bitcoin as a payment system to transfer money from point A to B. It's possible for businesses to convert Bitcoin payments to their local currency instantly, allowing them to profit from the advantages of Bitcoin without being subjected to price fluctuations because it's an instantaneous trade. But since Bitcoin offers many useful and unique features and properties, many users are going to choose to use Bitcoin. However, if it does not catch on, there is really no means to be able to create and sustain it and not cause a massive deflationary spiral as I see it coming. And the other thing, I guess the last thing I was going to comment on is, could someone create another digital currency? And the answer is of course. But, at the moment, Bitcoin seems to have the most popular decentralized virtual currency. And they've got, I guess, the biggest jump in the market. But yet there's no reason why they can't have competing. So my final comment on Bitcoin is this. If it seems too good to be true, it usually is. We're all out there working hard for our money. We're all out there trying to earn an honest living. And someone comes up with a virtual currency that they feel can revolutionize the world. I like the backbone of Bitcoin from a means to transact business. However, I can't buy into the sustainability of this as a means of currency, nor can I buy into the fact that it's something that can replace our use of money. I do like the idea that you could eliminate middlemen, though, and that's my only positive that I can take out of the whole Bitcoin system. But I'm not a huge. I don't believe in over government, but you got to have some sort of government, and to have a network of people that don't know each other, speaking back and forth by computers using software as a means to create an economic currency throughout the world, to me is just a recipe for disaster and failure in the future. And I hope that the governments in all countries step up and come up with some sort of regulatory method to keep Bitcoin at bay. It's certainly something I don't want to be involved in. It's an interesting subject. I could probably talk hours and hours more about it. I did barely even scratch the surface on what this really is. But if you have any questions, you can find me at Peter at In Black and Weitz, or you can tweet me at Peter Weitz, or you can look me up on LinkedIn. My name is Peter Weitz. Thanks for listening. It's been a great show. Next week, I have on a tremendous hedge fund and money manager, and certainly a show you're not going to want to miss. Make it a great week. You're listening to the In Black and Weitz radio program on Voice America Business. I'm your host, Peter Weitz. Take care.
Thank you again for tuning in to In Black and Weitz. Please join your host, Peter Weitz, again next Tuesday at 10 a.m. Eastern Time and 7 a.m. Pacific Time for another edition of the program on the Voice America Business Channel. Have a safe week.